It's very typical that we have clients call that are interested in owning and managing their property. And we encourage that. We're not against direct ownership of real estate in any way, shape, or form. But we are looking out for the client's best interest, and we want them to find something that's really going to work for them. So if I have a client that has $1.5 million in an exchange and they want to go out and find a property for $1.5 million, this is what they're going to get, right? And they're still going to have all of the risk factors, the liability of owning it, the potential to have to do a bunch of capital improvements, shorter lease terms, lower quality real estate, because I would be buying something for $1.5 million. Right now, we have an offering that is $28 million, brand new, industrial, next to a major airport, and the tenant is Tesla. So as a small landlord, I would never be able to sign a 15-year lease with Tesla or any other credit grade tenant. I'm going to be renting to lower grade tenants, lower grade real estate, and taking on the managerial risk to do that. In our world, we deal with very large institutional Class A buildings, brand new, long-term leases, 10, 15-year leases. We do lots of multifamily, which separates risk amongst 200, 300, 400 different tenants. And our multifamily, not only is it brand new and beautiful, but it's also typically 90+% leased with some of the best management companies in the entire country that manage billions of dollars worth of real estate. Whereas if I was doing that as a single individual, there'd be no way that I could do that. There'd be no way that I could raise rents in the same way. There'd be no way that I could have the same type of profit margins, and there'd be no way that I could control expenses in the same way as a large institutional company that manages, $3 to $5 billion worth of real estate. So in our world, we have sponsors that specialize in different asset classes. And so that could be multifamily. We have several sponsors that specialize in multifamily, which is a very risk asset class. We have several sponsors that specialize in industrial, which is a very hot asset class right now. We do land transactions for developers that are taking land off their books while they're doing development on top of that. We're diversified across all 50 states. Now, most of the states that we operate in are landlord friendly, not necessarily tenant friendly states, because if somebody's not paying their rent, we need to have somebody in there that will be. So on the multifamily, that absolutely comes into place. A lot of our offerings are in states with zero state tax. So whether it be Florida or Texas, or low state taxes like Arizona or Nevada or Colorado, or any of the states that are more landlord and tax friendly. The Sun Belt, we see a lot of properties within the Sun Belt because that's where the population's moving today. We typically don't see too many properties in very blue states, but that's not necessarily the case. Every now and again, we'll see properties in California. Every now and again, we'll see properties in places like Illinois or Minnesota or the Northeast. And that's because those are high-income states and thriving in a lot of ways. It's just they are also higher tax states. So we don't see a lot of that, but every now and again we do. And if you live in one of those states, it's very nice to drive down the street and let your kids know or your grandkids know that you own a portion of that building. And so if that's an Amazon fulfillment center or a FedEx distribution center or large tenants, industrial, multifamily, those types of things, if you live right down the street from it, you may want to be an investor there.